Good morning, everyone. Today, we're going to talk about the auto invest feature that Vanguard Personal Investor just launched, and I'm going to compare the auto invest on the other popular online broker, Pearler. Now, let's get started. We all like dollar cost averaging. I know it's boring, but it's a no-brainer investing strategy to invest index funds in general. Because by investing on a regular basis, you may invest when the price is down here, or up there, or in the middle. Over time, you not only average out your purchase price, taking away the risk and hassle to find the right time to buy, but also you get the benefits of another disciplined form of saving. The auto invest feature enables us to set up regular automated investments debited directly from your linked bank account. So far on the market, all the Robo advisors will have this feature on their platform because this is what they do. Some micro investing apps like Raiz offers automatic investing, and another online broker who advocate investing for financial independence, Pearler, has auto invest feature. And Vanguard just added this feature to the personal investor. And let's look at Vanguard auto invest. So far, it's only available for the Vanguard managed funds. They are aiming to extend to ETFs and ASX shares in 2022. You can invest from as little as $200. Either fortnightly, monthly, or quarterly. Please remember the minimum investing amount is $500 if you invest normally. So for auto invest, they are lowering the bar here. After you log in, from the left-hand side, you will see an auto invest. Let's set up 200 in total, and it will ask you how would you allocate this amount into different managed funds, either the ones that you owned or any other available managed funds. I can see from my bank account that is linked. Then I set up the frequency, let's say fortnightly. When do I start? Right now, today. And we can set an end date as well, then confirm. So what are the pros? It's very convenient and saves time, especially if you are a passive investor that mainly invests in broad market index funds. Investing shouldn't take too much of your time. So auto invest definitely helps with that. And second, as you can invest as little as 200, and this will surely make it easy for beginners as they may not feel too comfortable to start with, or young investors who don't have much savings yet. And number three, it's only available to the unlisted managed funds at the moment. And as we know, to buy units of managed funds, the investor definitely will get the buy NAV. And there's no brokerage fee for managed funds, so you can invest as often as you can. And there may be unlisted managed funds that are not available in the ETF form. And what are the cons? First of all, the management fee of unlisted managed funds is generally higher than its matching ETF, so that's an additional fee that would erode your long-term return. Second is less tax efficient than an ETF. Currently, there's a big complaint on the Reddit about Vanguard Diversified High Growth ETF, VDHG, which is a fund of 7 funds, and some retail investors argue that because VDHG is made up of Vanguard unlisted index funds, when investors exit an unlisted fund, they are paid out in cash. If fund managers sell assets to get that cash, it can create a capital gain tax for the remaining investors. Therefore, the additional tax bill would drag the long-term return to them. While this issue applies to any unlisted managed fund, not only VDHG, ETF, on the other hand, because of their different structure, are bought and sold on the stock exchange via market makers, who would be bearing the tax bill instead. And Vanguard says that they have ways to limit this tax drag by using money from incoming investors to pay out those who are leaving. And this is something that we need to keep in mind when we choose to invest in a managed fund or ETF, even if they are tracking exactly the same index. And also for any unlisted managed fund through Vanguard Personal Investor, investors only have the beneficial ownership, and Vanguard is the legal owner of your assets. So this custodian format may put some people off. And similarly, ETFs on Vanguard Personal Investor is also in custodian model, where JP Morgan is the sub-custodian to hold any listed ETFs and direct shares on investors' behalf. Having said that, the chance of Vanguard going under is almost impossible. At the end of August 2021, Vanguard Australia has 142 billion AUM assets under management. They have 82 funds in total. Speaking of chat-sponsored versus custodian securities, Pearler, the other popular online broker, offers auto invest too. And I have different assets on both of the platforms, and I'm not too worried about the Vanguard custodian model. And let's have a look at Pearler's auto invest and see what are the pros and cons to auto invest there. Step 1, it will ask you how would you like to invest, and you can auto transfer money or manually deposit, which is option 1 and 3. For option 1, once it's deposited, you invest immediately. Option 3 will only start investing when the amount reaches a specific threshold, and option 2 is to deposit regularly and wait until the amount reaches a specific threshold to invest. Most investors will choose option 1. Obviously, the reason to wait until a certain amount is to minimize the brokerage cost. And step 2, I can choose the amount I deposit as I choose option 1, and I will invest all the amount here, $1,000 weekly starting from today. And then they will let you review your target portfolio allocation. In step 4, it will ask you to choose your investing strategy. You can choose to invest in the current lowest weighted share, so every frequency you only do one trade, or you can rebalance portfolio. It will make multiple orders to reach the target portfolio every frequency cycle, or you can do equal invest, divide your amount equally and invest into different assets. If I have 4 ETFs, Pearler will do 4 trades buying 4 ETFs every week. What are the advantages of Pearler? They offer a portfolio target balance feature, and this works fabulous if most of your securities are on one platform because you can control your asset allocation this way, and this is something Vanguard Personal Investor can consider to offer. However, if you have investments through different platforms like me, a portfolio management site like ShareSite is a must. Even though they offer an asset allocation pie chart, I still like to do my own visualized charts myself so I can be on top of my investments. Number 2, Pearler partner with some fund providers to offer 0 brokerage fee as long as you stick with them for a year and you don't want to sell it within a year anyways to get the 50% capital gain tax discount. And last but not least is the elephant in the room. That is, Pearler offers chat-sponsored ETFs and shares. What are the cons? I like the unlisted managed funds on Vanguard Personal Investor. The more trades that you do on Pearler, more frequently you trade, the more brokerage fee would occur. And second, if Vanguard extends the auto-invest to ETFs and limited shares, the brokerage fee would be slightly cheaper than Pearler by 50 cents per trade. Third, with the auto-invest feature on Pearler to ETFs and shares, you will bear the market price. Maybe it is still okay for ETFs as the market price normally is very close to its NAV, but shares will be a totally different story. So keep in mind, by using the auto invest feature, you are taking away the option to put a limit order. For both Vanguard and Pearler, there is a 2 business day waiting time for your money to arrive into a cash account. And for Vanguard managed funds, there's additional 2 to 3 business days for your order to be executed. So your actual scheduled investing day will be different with your actual order fill day with 4 to 5 days lag. And as always, don't forget to have a lovely day, smash the like button and subscribe if you haven't. Grab the 2 free trading credits to Pearler by using my link. My name's Irene. I'll see you next week. Bye.